Hi everyone, it's Peter Schiff, and it is Tuesday, June 15th, 2010. Well, another strong day in the stock markets today. The Dow was up better than 200 points. I think we closed about 10,400, just over. I've been talking on this blog recently how I think the markets are in a bottoming process. I think the fear short term is overblown, at least nominally, for stocks, and I think the markets are headed higher. In that vein, I believe that this bear market rally in the dollar is close to an end. The dollar index was down again today. We're now down just under 86, and that's after the dollar hit a high of close to, I think, 89 last week. I think about 85 is the short-term support. If we close below 85, we could see a quick move back down to the 80 level in the dollar. And I think there are now enough dollar bulls, and in particular euro bears, that we've really set the stage for a major leg down in the dollar. I know I've been talking about that for a while. It hasn't happened yet, but I am confident that that is the way it's going to pan out. Also, oil prices continue to rise. This is the highest price in about a month. I think right now we are about 87 or 78, excuse me, $78 a barrel. And I think we're headed quite a bit higher. I think there's going to be some short-term resistance around 80 to 82. I think once we take that out, and we can do that quickly, maybe 86 will provide a little bit of resistance, but not much. I think we can go through 90 very quickly. Maybe there'll be a little bit of a pullback, but then I expect oil prices to be above $100 a barrel, certainly before the end of the year. A lot of this is also going to be the result of the BP oil spill, but also just the improving fundamentals globally. The Asian economies are strong, and once we get more downward pressure on the dollar, of course, that is going to provide an additional tailwind. So I am just looking for an explosive move up in oil prices. I am very bullish on oil, and at some point, you're going to start to see oil being a drag on growth expectations for the U.S. economy, which I still think are too sanguine. People are still looking for a recovery. I still believe that we're early in a depression, an inflationary depression, but much higher oil prices, which will translate into higher prices for gasoline at the pump, is going to start undermining this whole idea that the consumer is coming back. The consumer is not coming back, and certainly when he has to spend a lot more money for energy, that's going to be another headwind in his path. And also, gold was very strong today. It was up about $15 an ounce. The gold chart looks phenomenal. I think gold, again, looks like it will move up dramatically from here. I'm expecting the Dow gold ratio to hit a new low. We got down to about 8 to 1 last week, which tied the record low the Dow hit, or not the record low, but the low for this move back in March of 2009. But right now we're about 8.5 ounces of gold, the value of the Dow. I'm expecting gold to really blow through to the upside and bring the Dow gold ratio way below 8 to 1, even though I still believe that stocks in the U.S. will rise in a nominal basis from here. But in terms of gold, I expect them to fall, and they could fall substantially. Speaking about gold, I couldn't help noticing there was an article in the Washington Post that was critical of congressmen who might have investments that they might further by their legislative agendas. And they focused on Ron Paul. And everybody knows I'm a fan of Ron Paul. I was an economic advisor in his campaign in 2008. And Ron Paul believes, like I do, that gold prices are moving higher. And I think Ron Paul has about 50% of his personal portfolio in gold and silver stocks, which is about the same percentage that I have of my portfolio in those stocks. Now, the inference here is that, well, Ron Paul sits on the Senate Banking Committee, and here he is advocating for a gold standard, and he owns gold himself. And the idea is, well, he's just trying to get us back on a gold standard to further his investments in gold, which, of course, is nonsense. I mean, first of all, he's got no chance of achieving that because he's the only congressman who wants us back on a gold standard. But of course, if you actually look at what Ron Paul is doing as a legislature, everything he is attempting to do would undermine his gold holdings. He's trying to get fiscal responsibility. He wants a sound dollar. He wants to rein in reckless spending. He wants to rein in the Federal Reserve. Everything that he wants to do would undermine his investment strategy. In fact, the reason that he owns so many gold stocks is because he's sure he's going to fail. that he's not going to succeed in convincing Congress to do the right thing, that they're going to keep on inflating, they're going to destroy the currency, and that's why Ron Paul owns gold. He's working his best to make sure he doesn't need that gold, but he owns it just in case because he realized how difficult the challenge is. You know, one of the most absurd things, I saw them talking about this on CNBC, and Ron Insana actually insulted Ron Paul. He called him a simpleton. He said that he's clueless. He said that Ron Paul doesn't even understand basic economics. He said that buying gold and silver stocks was foolish, that there are better ways to hedge against inflation than gold. Oh yeah, Ron? Like what? I mean, he's not a simpleton. He knows he's one of the only people in Congress that actually understands basic economics. It's Ron Insana that needs a course in basic economics. You know, Ron has been a journalist almost his entire life. He started with FNN, I think back in the early 80s, which later merged with CNBC. He did try to run a hedge fund. He started Insana Capital, I think in like 2006, and he tried to popularize on his name. And he had to shut his fund down by 2008 because he couldn't raise enough money to make it as a hedge fund manager. Now, of course, he's getting back into broadcasting. But Ron Insana could learn a lot from Ron Paul. In fact, it's because Ron Paul knows so much about economics that he understands that he has to own gold. And I don't even see how Ron Insana can insult Ron Paul's portfolio. I know that portfolio was done very, very well. I saw the stocks that were mentioned that he's owned. That portfolio has gone up dramatically over the years. He's certainly outperformed the S&P 500. You know, I'm sure he's outperformed Ron Insana's personal holdings. I have no idea what he owns. To criticize Ron Paul for actually having a foresight, to have known enough about economics, to have bought so much gold and silver, it just shows you how the mainstream is still so clueless. And you know, what does Ron Insana thinks is a better hedge against inflation? Tips? Who would want to buy those? If you bought tips, you've made nothing because tips are based on the CPI, which has got nothing to do with inflation because the government just makes that up. You know, also talking about the mainstream, I happened to catch Mary Roubini this morning on CNBC. You know, he's the guy that kind of stole my Dr. Doom moniker. You know, once the New York Times gave it to him, he was one of the other people like me that was warning about an economic collapse. I think my warnings were more precise than his. But of course, now that he's been accepted into the mainstream, he's not really Dr. Doom anymore. I mean, listen to the guy talk. He's saying maybe we'll have a double dip. I think we're going to have subpar growth. You know, he's a fan of the stimulus. He thinks it's, he's really, toned down his rhetoric. He has no clue now what's about to happen. The next major leg down, because we are, as I said, early in an inflationary recession. Mary Roubini is completely missing the collapse of the dollar that's coming, the increase in inflation. I think he's underestimating the strength of the Asian economies, the Chinese economies. So this next collapse that's going to happen, while Amir Roubini is now in the limelight, he's going to completely miss it. Of course, when he was in obscurity before, he got it right. But now that he's caught the attention of the media and they're now drooling over the guy, he's getting it completely wrong. The real crisis is still in front of us, not behind us. You know, I wanted to say one quick thing. You know, they had the hearings today again with BP. And, you know, I know I'm not a big fan of BP in that, you know, there could have been some negligence here, but I don't like the rhetoric. Again, I mentioned this last time on my blog, but, you know, there are a lot of victims here. It's not just the people that live along the Gulf Coast. What about the shareholders of BP? I mean, even if there were some people at BP that were negligent in management, the shareholders had nothing to do with it. Yes, I understand that when you own stocks, you got to take the risks. That's part of the game. But we shouldn't try to, you know, rub salt into wounds. We don't want to discourage risk-taking and stock ownership. You know, a lot of the people who get these dividends from BP stock, these are retired people. They might depend on those dividends, just like a fisherman depends on the ability to fish. You know, I looked at the top 10 holders of BP. One of them is a big automobile insurance company in the United States, I think State Farm. They might have to raise rates. The Bill and Melinda Gates Foundation is among the top 10 holders of BP. They do a lot of good charitable work. Maybe some of those charities are not going to get us enough money if BP goes bankrupt. And also, you know, when the Wall Street investment banks, when they damaged their economy, sure, the government helped, but they did a lot of damage. We bailed them out. You know, but if an oil company, again, with government help, does damage, we just want to celebrate it and try to fine them and drive them into the ground. You know, maybe they will go bankrupt. And if they do, they shouldn't be bailed out, although I don't think they're going to go bankrupt. But it shows a double standard. If somebody on Wall Street screws up, everybody bails them out, but nobody sheds a tear for an oil company. But oil is a vital industry in this country, and we do need it. Again, I'm not excusing any negligence, but I don't like this assault on capitalism. Take care, everybody.